Hello, everyone, and welcome to another roller coaster ride as we get through COVID. Cathy Sabater, mortgage planner and proud veteran. I just found out, through some research, that 8.4 million people in their 50s and 60s, are burdened with student loans. Hey, I just thought it was the 20s and the 30s and the 40s. But at the end of the day, we want people to have relief, especially here, most importantly, for their pre-retirement. Now, why do they owe so much money? Well, in 2020, borrowers 50 and older owe $336.1 billion on student loans. That's 22% of the nation's total student loans, says AARP. Why? They have their own college debt, and they also took out loans for their children and their grandchildren. So here goes a graph, which I thought was pretty amazing to see. And this is by age group. So 20s, 30s, 40s, 50s, 60s, 70s, 80s, and 90, burdened with student loan debt. So we all know that this administration was going to consider canceling 10,000, maybe up to 50K. That's still being discussed. As soon as we find out, well, how does this affect us? Well, a lot of my clients now are unable to now invest in a home because now they're burdened with student loans. With the way the pandemic is, although student loans are in forbearance, which means you are not making a payment, it is showing on your credit report that you are. The other thing that has changed is now student loan companies are now putting down the total amount that you owe, and they're putting down the payment at 1% of whatever the balance is. So I'll give you an example. If you owe $50,000, then more than likely 50,000 times 1% means your payment is $500. Okay. And now that $500, instead of going to investing somewhere else, it's stuck with the student loan, right? So that is how it's affecting the home market. We definitely want to have more people owning versus renting. And at the end of the day, hopefully this administration will figure out what they're going to do to help them with that. In regards to mortgage bond securities, stock market is doing a little better than yesterday, and we've lost a little bit of what we gained the other day. One of the most reasons for it is that the administration stated that they wanted to increase capital gains almost 20%. So yesterday, the stock market didn't really react to it well. It's rebounding today because we all know that there's a lot of debt that needs to be paid, and who's going to be making that payment. So as a result, as you can see, this roller coaster ride as we're getting, we did end up getting some gains, but now you see this little cross. Looks like we may be going downwards. It just depends on what news we get next week. Stay safe. Talk to you soon.